Good morning, welcome to CATEX TV. My name is Frank Fortunato. Today is Wednesday, October 23rd, 2013. If you're listening on the radio and want to watch this, go to www.catex.com. Well, as to about 2 hours ago, thousands of Australians were being told to leave their homes in New South Wales. The state's emergency minister said, if you don't have a plan, let me give you one. Get into the car, drive down to the Sydney metropolitan area, and let the firefighters do what they can to protect this community, should this turn for the worse. Risk management, applied insurance research worldwide, one of the big modelers, said that the city of Sydney could come under threat if the wildfires in fact merged. They issued an extreme fire danger rating, just one below the highest level of catastrophic fire danger. About half an hour ago, the Sydney fire authorities and the New South Wales fire authorities were able to report that because of less dry conditions in the area, the wildfires have not merged. And at least for today, it seems that the threat to the almost 5 million person Sydney metropolitan area has abated somewhat. So this is good news indeed. Thus far, about $90 million in claims, insurance claims, have already come in. Many more will be expected in the future. Over 200 homes have been completely destroyed. Travelers Insurance Company has made a move. They're going to pull its management liability reinsurance program when it expires at the end of this year. This is the latest downturn for reinsurers coming from the primary market. It comes just a couple of months after Chubb dropped its quota share that it had previously purchased for its management liability portfolio back in the summer. So these are two big flagship carriers that have pulled out of the reinsurance market, supposedly resulting in hundreds of millions of dollars of premiums being lost to reinsurers. What this means is that both carriers could either be increasing their retention or going into the alternative market to buy some sort of insurance-linked security structure. Here's a bit of news that came out of the property casualty insurer meeting in Boston that's winding up today. Reinsurers are now focusing on U.S. regional carriers in response to mounting competition from alternative capital and the falling demand from national carriers such as Chubb and Travelers, as we just mentioned. Multiple sources at the meeting have said that initiatives by reinsurers such as SCOR, Everest, Aspen, and Transatlantic are focusing on meeting the needs of regional insurers. Regional insurers, it is said, typically feel bypassed by the big three brokers who don't pay enough attention to them. Whether that's true or not, we don't know. In Baden-Baden, Tom Bolt, the performance director of Lloyd's, made a couple of interesting comments yesterday. He said that one of the challenges to the insurance industry, oddly enough, comes from the risk models. Bolt said because the models are so precise, what happens is prices can become very specific to the individual risks that are modeled. This means that underwriters have much less flexibility in being able to set a price. Bolt reminded people that don't lose sight of the fact that the whole point of insurance is that the premium of many pays for the losses of few. Where you have business now being priced on such a specific basis, you can lose sight of this and you lose that little bit of fat in your earnings to cover losses on perils that are perhaps not as thoroughly understood. Bolt pointed out we've seen this following some large cat losses in recent years. Instead of rates increasing a little bit on all lines, the prices have only hardened on the specific geographical lines affected by the losses. Bolt's actually quite correct in that. Yesterday morning, 2 hospital workers and a pilot were killed when a medical helicopter crashed outside of Memphis, Tennessee. The aircraft was heading to pick up a patient. The hospital was the Le Bonheur Children's Hospital, and the helicopter was owned by Hospital Wing. Apparently, the FAA is investigating it right now. Willis Re, the big reinsurance broker, has finally given the green light on its follow form facility, Global 360. This is after 5 months in the pipeline. As we reported yesterday, Hiscox, the People's Insurance Company of China, and Berkshire Hathaway are going to be the markets in the facility. This is a similar arrangement to the Aon Berkshire Hathaway deal. And here's an interesting story. If you've ever been to Seattle, you know it's a very hilly place. It has very steep slopes. Well, a study now has been conducted by geologists saying that if in fact an earthquake of significant size struck Seattle, Anything that are on those steep slopes or hills could slide into Lake Washington or into the sea. In the year 900 AD, apparently, on the Seattle Fault, where Seattle sits, there was a huge earthquake, estimated about 7.5, that in fact ended up with vast portions of the city sliding into Lake Washington as well as into Puget Sound. Of course, back then, there was no development, except perhaps for some unfortunate Indian wigwams. Now, of course, there's quite a bit of development. Also yesterday morning, the Israeli government announced that some 7,000 Israelis could be killed in Israel if a major earthquake struck there. So there seems to be some planning going on. Tonight will be the opening game of the World Series in Boston between the Red Sox and the Cardinals. Temperature at game time is expected to be in the 30-degree range, possibly 37 or 38 degrees. Why we play baseball coming up to November and why we play it at night is beyond me, but we do. That's the news for today. If we have any breaking news, we'll come back and tell you. Thank you for watching, and we'll see you tomorrow.